You may be wondering, what is tactical asset allocation versus value investing versus buy and hold, sort of passive investing that's become so popular over the past decade or two. In this video, I'm going to clarify all of that, and make sure you stay tuned to the end, because I'm going to tell you what I think is the most important thing to realize about all these different methods of investing, whether it's tactical or value or buy and hold. Hi, I'm Camille Gaines. Here and on my website, retirecertain.com, I share our adventure from a really uncertain financial future to financial independence beginning around age 50. And we used both traditional investing, like in stocks and bonds, like I'll be talking about in this video, as well as alternative retirement strategies that are ignored in traditional retirement planning to reach that financial independence. And I share it here with the hope that I'll inspire someone else maybe to see what's possible and what's doable, because I think we live in a time when we kind of have bought into that after we retire, after 50, we sort of start scaling back and dwindling down, and there's so much that's possible. So make sure, if this interests you, you subscribe to my channel, click that little bell so that you know when I post a new video. All right, so let me get right into tactical investing. I want to back up and start first though with buy and hold investing and segue into explaining tactical asset allocation. All right, so buy and hold investing is simply based on an asset allocation, and this has become the most popular way to invest. It used to be that more fundamental analysis was applied in deciding how to invest. Now, companies, financial institutions have researched and provided all kinds of data to support that, based on however old you are and however much risk you want to take and whatever your financial goals and life expectancy is. But honestly, it's mostly your age, and it's mostly your age. How much you should put in stocks versus bonds. The major two categories for investing, right? Stocks are associated with growth, bonds are associated with income, and asset allocation is about, you know, starting out when you're younger with a high allocation into stocks because you have a longer time period to grow, compound your money before you'll need that income, because it's assumed that you have income from your job, and so you wouldn't necessarily want bond income. Not only that, you have a long time that you can ride out those inevitable bear markets that are going to come along and reverse a lot of your gains from the stock market, right? Because, well, that's what happens. They're a reality of life. I've done another video on that, and you can watch it. I'll put a link up above. So that's what buy and hold investing is all about. You just simply take that, okay, I'm however old, and I'm going to put, you know, if I have $100,000, I'm going to put $60,000 into a stock probably index fund, and I'm going to put $40,000 into a bond index fund. And from there, it could be broken down a little bit more into international stocks or global stocks on the stock side, or small cap or large cap stocks. And on the bond side, it could be global bonds versus US bonds, or maybe treasuries versus corporate. And, you know, it could be broken down further, but it's not always. Often it's just those two major asset classes, and that asset allocation model is all about whether you're in stocks or whether you're in bonds. All right, that's buy and hold investing, also called passive investing. That is what has become extremely popular because it's easy and people really don't have to do much work, right, to do that. Individuals do that, financial advisors do that, wealth managers use this strategy. It's very common among all types of investors, as well as wealth management providers and financial advisors. All right, that's the first most common method. All right, then the next method I want to touch on is called value investing. And as I put together the information for this video, I was really just going to talk about buy and hold versus tactical investing. But I realized, well, number one, I love value investing, but also value investing is sort of, it overlaps with tactical investing. And I think by understanding value investing, tactical investing makes more sense. Plus, I also had a really great prop, and this was my dad's book, The Intelligent Investor by Benjamin Graham. It is sort of the granddaddy. He was the granddaddy of value investing. This book was first published in 1949, and it's still referred to often by value investors. Another well-known value investor is Warren Buffett, who, as you can see in my other video, I'll put a link to it, recommends passive buy and hold index investing. Warren Buffett is really a value investor. Not only that, he's really become more of an entrepreneur, or has acted as more of an entrepreneur in the past, because he buys huge positions in companies, and then he can get in and influence the management and the running of those companies to help them become more profitable. Okay, so a lot of people think, oh, Warren Buffett recommends passive investing now. Okay, but what's he doing, right? Okay, so having said that, value investing is about buying what's undervalued, what is, offers good value for your money. Just like when we go to the grocery store, I love to buy groceries on sale. I get more for my money, right? You may have heard my analogy of cashmere sweaters in May, right? We get more for our money with value investing. Funny enough, people don't think about that as often when it comes to investing their money. I think what happens, and I've been there and done all of this, right? I've been investing for almost 40 years. So I think what happens is we think, I've got to start investing, or I've got to hire this financial advisor. I've got to put this money into something so that I don't lose out on opportunity costs. I don't experience opportunity costs, or I don't lose money to inflation. I have to start investing, and been there, done that, versus what offers really great value now. What can I buy that's undervalued? Because when we buy things that are undervalued, we're more likely to be able to lock in a capital gain, to build wealth from that undervalued asset, right? Because it's more likely to go up in value when we buy it at a lesser price, right? So value investing, because we're buying an asset at a cheaper price, I always feel like it's less risky, right, than buying something that is higher value, way overvalued. In fact, when we enter bear markets after a strong bull market, and a lot of stocks that have been the real drivers and high flyers that are way overvalued in those bull markets, they're the first ones to drop at the end of that bull market because they were overvalued. And it's the companies that are lower valuations that drop less during bear markets. So in general, value investing is less risky, in my opinion, than growth investing, or in investing simply because it's time for us to do asset allocation into stocks and bonds, right? Okay, so having said all of that, the next way to invest that I really wanted to talk about in this video is tactical asset allocation. And that sort of marries the two that I've already talked about, both the passive buy and hold with the value investing. And the reason I say that is because with tactical investing, tactical asset allocation rather, you're still allocating a certain amount of your money into stocks, into bonds, usually also though into other asset classes that tend to do well during uncertain financial times, during black swans, during things that happen, right? So tactical asset allocation may have holdings in gold, for example, because gold is known to do well during financial crisis, or it may have an allocation into tips, bonds, or something else that does well during inflationary times, perhaps real estate. So tactical investing is not only about saying what offers value now, but it's about saying, how can I protect my portfolio? What assets will do well when market conditions change? But it's also about saying what opportunities present themselves now. So tactical asset allocation is more about implementing those certain percentages, just like we saw with the buy and hold strategy. But tactical investing itself can be less about asset allocation and more about investing as opportunities are seen in changing financial and economic conditions. Okay, so tactical asset allocation again is a little more typically diversified into different types of assets that do well under different market conditions. In fact, one of the most popular tactical asset allocation models was developed by Ray Dalio, and it's called the all-weather portfolio. I have an article about this on my website. I'll put a link below, and I'll put a link above to more information on tactical investing that you can check out. If you found this information helpful, make sure that you watch this video next.